Right now, millions of UK pensioners are sitting on money they have already earned, but they are simply not collecting it. Some of these payments are worth over £6,000 a year completely tax-free, and most people never even apply for them. This is not charity, and it is not a handout. It is money the government already owes you, sitting unclaimed in a system nobody explains properly. In the next few minutes, I am going to walk you through 7 hidden payments most pensioners miss, and exactly how to claim every single one before August 2026. You do not need to be desperate, disabled in an obvious way, or living in poverty to qualify for most of these. That is the biggest myth out there. Let's start with the one that surprises almost everyone: a payment available even if you own your home, have savings, and already get a private pension. It's called pension credit, and most people wrongly assume that owning property or having a modest pension automatically disqualifies them, but that is simply not true. If you are over state pension age and on a low income, this can top your weekly income up to £238 if you're single. For couples, that figure rises to £363.25 a week just from this one application. If you are severely disabled or caring for someone, there are extra additions on top: £86 for severe disability and £48 for caring. You can apply online, by phone, or by post through the pension service, and it often unlocks housing benefit automatically in the same process. Here is the catch nobody warns you about: pension credit can only be backdated 3 months, so every week you wait is money permanently gone. Now, here's something even less known. If you reach state pension age before April 2016 and built up some retirement savings, there's a second, older payment hiding inside the same claim. It's called savings credit, worth up to £17.96 a week if you're single, or £20.10 a week as a couple. Most pensioners think savings credit ended years ago, and for newer retirees it did. But for this older group, it never actually went away. Next is a payment that has nothing to do with income, savings, or how much pension you already receive, which is exactly why so many people skip it. It's attendance allowance, and you do not need an actual carer to qualify. You just need help or supervision because of a health condition lasting 6 months or more. The lower rate pays £76.70 a week, and the higher rate pays £114.60, completely tax-free. People assume this is only for serious physical disabilities, but conditions like dementia, blindness, and even needing supervision for safety reasons can qualify you too. Claiming it can also quietly increase your pension credit, your housing benefit, and your council tax reduction, so one form can unlock several payments at once. The form is long and the questions feel repetitive, but skipping detail is exactly why genuine claims get rejected, so be specific and thorough every time. Unlike pension credit, this one is not usually backdated, so every week you delay applying is a week of money you will never get back. If you live in Scotland, this same support now comes through pension age disability payment instead, and existing attendance allowance claims transfer over automatically. Now let's talk about housing, because many pensioners genuinely believe housing benefit was scrapped completely and replaced by universal credit for everyone in the country. That is false. If you have already reached state pension age, new claims are still open to you, and they can cover a substantial share of your rent. You can even apply up to 17 weeks in advance once you turn 60, which means you can lock in support before you actually need it. Right alongside that sits council tax reduction, and this one trips up homeowners especially, because owning your home does not automatically rule you out. Depending on your local council's rules, this can reduce your council tax bill by up to 100%, yet most homeowning pensioners never even check. If someone in your home needs an extra bathroom, kitchen space, or wheelchair access, there's also a disabled band reduction that can drop you a full council tax band. And if a loved one has dementia, Alzheimer's, or Parkinson's, and has been certified as severely mentally impaired, the household could get a discount of up to 100%. The person with the condition does not even need to be the one paying the bill, which is something almost nobody realizes until it's pointed out. Now let's move to your energy bills, because this next one has a real deadline attached to it, not just a missed opportunity. The Warm Home discount gives you £150 off your electricity bill, and it's usually automatic if you're getting guarantee credit. But it only works if your name matches the one on the energy bill, so a simple mismatch in paperwork can quietly cost you that payment. The 2025-2026 scheme has already closed, and the next normal cycle does not reopen until October 2026, so check your past payment now. Then there's the winter fuel payment, which depends on your birth date, and for winter 2026 and 2027, you'll need to be born before the 28th of June 1960. This is usually automatic, But address changes, care home moves, or moving overseas can break that automatic system without you even knowing it happened. If your income goes above £35,000 a year, this payment now gets clawed back through tax, so it's worth understanding exactly how that applies to you. On top of that, cold weather payments pay £25 for every 7-day cold spell, automatically, but only if you're already getting pension credit at the time. Many pensioners don't realize pension credit is the key that unlocks this one too, so getting that first application right has knock-on effects everywhere else. Now here is one of the biggest financial corrections in pension history, and it specifically affects married women, widows, and people over 80 on the old state pension. An official review uncovered 130,948 underpayments, totaling £804.7 million in missed pension money. Married cases averaged £5,553 in arrears, widowed cases averaged £11,725, and over 80s averaged £2,203. This usually happened because of an administrative failure, not because anyone did anything wrong, which is exactly why people assumed they were already being paid correctly. The official review is now complete, so if you or a family member fall into this group, you need to contact the pension service directly and ask. If the pensioner involved has already passed away, their next of kin or executor can still pursue this money on their behalf, even after death. There's one more hidden gap worth checking, especially if you claim child benefit anytime between 1978 and the year 2000, which affects mostly women. If your national insurance number was missing from that original claim, you may be missing home responsibilities protection, which can permanently lower your state pension without you knowing. You can check this yourself and submit a correction using Form CF411, and if approved, it can raise your ongoing pension and generate a lump sum in arrears. Do not wait for a letter to arrive explaining this, because the responsibility to check currently sits with you, not with the department holding your records. Finally, once you do secure pension credit, several extra entitlements often go completely unclaimed, even though they're sitting right there waiting for you. This can include a free TV license once you turn 75, help with NHS dental treatment, glasses, hospital transport, and several of the payments we just covered. Some of these trigger automatically, but others need a separate application to TV licensing, your local council, or your energy supplier, so don't assume it's already sorted. And if you're 60 or over in England, your prescriptions are already free, yet plenty of pensioners keep paying for them every single month without realizing it. So here's the real takeaway from everything we've covered. None of these 7 payments require you to be desperate, only informed and willing to ask. The system will not chase you down to hand you this money. Every single one of these requires you to take the first step yourself. If you found this useful, there's another video on this channel breaking down exactly how to challenge a rejected attendance allowance claim step by step. Watch that next, because getting turned down the first time does not mean you're not entitled. It usually just means the form was filled in wrong.